Hey everyone, Andy here with Twisted Finances, and today we will be talking about what an income statement is and how you can analyze one. So the income statement is one of the most important financial statements of a company, and it's what paints a picture of the revenues and the expenses a company incurs over a period of time, whether it's monthly, quarterly, or annually. Now, it would be absolutely amazing if companies could furnish an income statement daily or even hourly, but the costs to furnish financial statements are like exceedingly high. And a general rule of thumb in business is that if the cost is more than the benefit, then there's no reason why they should do it. So let's start talking about the structure of the income statement. There are actually two types of income statements. You have a single step and a multi-step income statement. We're going to start off talking about the multi-step because that's the income statement that you will probably come across more often than not. So here is an example of a multi-step income statement. At the very top, you're going to have the name of the company, the name of the financial statement, and the dates on which the income statement is covering. So the very first thing listed on the income statement is the sale, and this gets reported in the net value, which is the gross amount of sales minus any returns or discounts. Next up is the cost of goods sold. Now, the cost of goods sold is literally just what it cost the company to make the product that they sold. You subtract the amount of cost of goods sold from sales, and that'll give you your gross profit. If the gross profit is negative, that means that the company is struggling pretty badly and is being forced to sell their inventory or their product at a loss, which could signal maybe bankruptcy terms or an immediate need for cash, so they're forced to sell this stuff for way below than they should. So after the gross profit, then the operating expenses gets listed. And operating expenses are all of the expenses that the company incurs to do day-to-day business. So selling, administrative, like office people, CEOs, sale commissions, rent for the buildings, advertising, anything that the company must pay for in order to conduct business. So once we have all of the operating expenses, we then deduct that from the gross profit, and that gives us the operating income. And you want the operating income to be a positive number. That means the company is operating efficiently and profitably. If the operating income is negative, we'd have to do a little digging on why. If the operating income is negative because the company spent a large amount of sum on advertising, then that might be okay because the income from advertising is going to show in a later period, possibly. Everyone is always so obsessed with the operating income, and if it's negative, then the company is in a bad shape. But really, you have to dive deep and figure out why they're reporting a negative operating income, because a negative operating income isn't always a bad thing, depending on what caused it to be negative. And then after operating income is the non-operating income section. And this includes basically anything that really doesn't have anything to do with the business. So if they sold some property or they sold some assets, then the gain or loss from that sale will be reported in non-operating. And unless they're a bank or an insurance company, then any interest expenses, interest revenues, insurance revenue, or insurance expenses will be reported in the non-operating income section. And so once you got all of the non-operating income and expenses all tallied up together, you either plus or minus that on top of the operating income, and that'll give you income from continuing operations. A little pointer as well, if you're looking over a company's financial statements and they report a positive income from continuing operations solely because they sold an asset or some property during the year that boosted their income values up, you shouldn't take that into account for evaluating whether the company is being ran efficiently and profitably, because that is going to be a one-time thing. They sold their asset one time, got money for it. Not going to reflect in future periods. So don't think they have like $200,000 in income, but that might be because they have a $500,000 gain on a sale of assets. So next up, we got the single step income statement. And as you can see, it is much more simple and shorter than the multi-step, but it reports the same bottom line. It just takes a different method to do it. So as you see the difference here, in a single step income statement, any revenues and gains are all categorized together to get an aggregate number of income. And then on a single step income statement, all of the expenses get grouped together and get deducted from the revenue, and that gives us the net income, which is the same amount from the multi-step income statement. It's just all put together, and it's just income minus expenses. The single step, that's all there is. Now, obviously, between a single step and a multi-step, the single step doesn't go into as much detail. It really doesn't paint a picture as well as the multi-step does, but all the numbers are still the same, and you can kind of figure out by going through the lists on what the operating and non-operating sections would be. But for the most part, if you're you're doing financial statement analysis on a company that you want to invest in, you're more than likely to come across multi-step income statements. If you're a private equity firm or an angel investor and you're looking at investing in a small business or a small company that is private, then you're probably going to see the single step because it's much easier to make, it doesn't cost that much money, and private companies are typically only needing financial statements to secure business loans to prove their income. But at the end of the day, they both give the same information. As long as you know what to extract from a single step income statement, you can get the same exact information that you could from a multi-step income statement, just kind of easier laid out in a multi-step because you can see everything broken up in multi-steps. I hope this video was helpful. I hope you enjoyed it. If so, please do smack that like button right on the ass, and feel free to subscribe if you want some more finance content. Always remember that the best time to start investing was yesterday. So go ahead and get in the description. I got some free stocks, some free crypto that you can get signing up. I hope you have a great day. I'll see you next time.